This is your stock market report for today. Now we have two large consumer businesses reporting earnings this week. Let's talk about it. So this Tuesday, we have the consumer staples giant Walmart reporting earnings on Tuesday for Q1. Now, for those who may not be familiar with Walmart, Walmart is made up of three businesses. You have Walmart US, Walmart International, and you have Sam's Club. Now, as far as what Walmart has going for them, they have a business moat, and this business moat is their cost moat, or as they call it, everyday low prices. So basically how they make and generate money is that they offer discounted prices on their products that they offer to consumers. Not to mention, they recently rolled out within the last 3 years the omni-channel. Now the omni-channel is a combination between the retail stores and the e-commerce space tied together to now enhance the consumer's experience. Now this looks like, as far as online shopping, curbside delivery, home delivery, and also too, you get points at the fuel pump, you get scan and go, and unlimited free shipping. What did Walmart do really well last year? Well, Walmart generated a revenue of $648 billion last year. Not to mention they grossed $157 billion and they netted $15 billion with a free cash flow of $9 billion. Now this puts Walmart up 6% year over year. Now, Walmart has to accommodate for their e-commerce space. So a lot of their capital expenditure has been going towards enhancing the e-commerce expenditure. Now, as far as how much revenue they brought in, was $100 billion off of the e-commerce space. Now, this is to compete with the likes of Amazon and Costco. Now, let's talk about Costco for a second. Costco has a membership plan that gives incentives back to their customers. Most of their customers encompass middle to upper class customers. Things that follow in the lines as far as their incentives, well, they have reward points, lower costs with the membership fee, and they offer large bulk items and quality products. Now, unlike Walmart, Walmart has a wide range of products at a discounted price. Costco has a limited amount of products, but they have it in quantity and quality, which also is what a lot of customers want versus some of the products that Walmart offers. Now, Walmart more so caters towards a certain demographic of lower to middle class Americans. So what are some of the concerns centered around Walmart? Well, one, Walmart recently had closed down roughly 51 health clinic stores nationwide. As a byproduct, they lost a lot of money due to the fact of the improfitability. Many of them did not account for as far as poor profit margins and what it would have cost to account for operating a health clinic service. So as a byproduct, they end up scrapping the whole deal. Now, also too, investors are worried about inflation sticking around a lot more than it was before. As a result, Walmart may have to make themselves a little bit more competitive by raising their prices, which goes against their low cost moat. Now let's talk about the big consumer discretionary business, Home Depot. Now Home Depot, for those who don't know, is the largest home improvement retail store based off of net sales in 2023. Now Home Depot has three customer bases that they cater towards. They have the DIY customer, which does it for themselves. You have the pro customer, who pretty much comes in and they are general contractors who buy the products and in order for them to run their business. And then you have the DIFM, which stands for Do It For Me customer. Now this customer basically comes in and pays Home Depot associates to pretty much install products such as sinks, toilets, cabinetry, kitchen countertops, things of this nature. Now recently, Home Depot has seen a 3% reduction or decline in their revenue. They roughly brought in $152 billion last year. Now this is still big money, but they are now focusing from products to more so customer experiences. Now, this customer experiences is being more so centered in the e-commerce space in order to give the customer a little bit more seamless and effortless act to purchase their products online. Now, this is a direct result as the economic sentiment is shifting because home buying is slowing down in these tight economic conditions, and inflation is sticking a lot harder than many people anticipated. So their focus now went from the products to the customer experience. But this also is in line with competing with their competitors such as Lowe's. Now, Lowe's offers some of the same products and amenities as Home Depot. So Home Depot now has focused more so on doubling down, focusing on the e-commerce space. Not only is Home Depot focused on the customer experience, but they're trying to return more value back to the shareholders. Recently, they increased their dividend by 7.7%, which brings it now to $2.25 per share that you own. So for a total of 4 quarters, in total, you get $9 back for every 1 share that you own. So these are some of the things that Home Depot is doing to pivot towards returning back to customer experience, but also shareholder value. So what are your thoughts as far as Home Depot, Walmart? Do you think these companies are worth holding? Do you think they will fare well in Q2? You let me know in the comments below. Be sure to like, subscribe, and share. And this has been your stock market report for today.